Hello, everyone. Welcome to today's session. Let's get underway here. I'll start out with looking at current market conditions. Still in this overall uptrend, had a little bit of a retracement yesterday. We'll take a look at that. In terms of overall market strength and market conditions, we know that we're in a bull market. We know that we're trending higher. We know that we're at the top end of that long-term trend as well as the short-term trend. Short-term indicators are momentum has been up in the extreme. It was up there yesterday, and yesterday's move knocked it back down, which is a good thing. Ultimately, we kind of want it this way. If we can get a day or two or three where things will retrace and correct and it's relatively orderly, it's not just fear-based selling. Ultimately, that does prove that the long-term trend is still intact and that this is just some profit taking or end of year type selling and positioning. And that ultimately the long-term trend will continue. It just is not at a sustainable level where it could continue from here without some kind of a pullback. Breadth is still extreme. Sentiment pulled back into that buy zone, but towards the upper end of that range. Buy-sell ratio also at this extreme range. This is an area, again, that we look back. If we go back 3 years and we look at where we were at, each of these ranges, when we get up to this level, we end up getting some kind of a retracement, some kind of a pullback. Whether or not it turns into a full-on downtrend, that's always, that we never know exactly how that's going to unfold. But the fact that we're in a long-term trend up, pardon me, that's how we can base our bias on that long-term trend. And then shorter-term trend, we can say we're looking for pullbacks. We're looking to ride and trade aggressively or more aggressively towards the bullish side versus in a bear market, which we're in this downtrend bear market, we may just want to avoid stocks altogether and potentially even avoid some of the rallies that are in that overall downtrend as well. Once that trend shifts, we can take advantage by overweighting portfolios on these longer term uptrends, or I should say the bullish uptrend. Anything with a buy-sell ratio above 1, that gives us this crossover. That's where we get green above red, is when that buy-sell ratio is above that 1 right here. So we're in that situation, but we're to the upper end of that range right here, and we're going into the next week and a half of kind of slower holiday type of trading. That tends to be lighter volume. Sometimes it can add some volatility. Most of the time it's just kind of quiet and muted, and unless there's some kind of big news item that ends up coming out that could ultimately move the markets, that will be yet to be seen. But in terms of just flat out internals, that's what we'll be focused on, is watching for this wide buy-sell ratio to come back down a little bit and possibly even a decent retracement. If we could get something to pull back even a little bit more, that may set it up for one more move higher, and then things start to come back down and reverse. They just don't last. You can see what the last year looked like, and we had one kind of a small one here. This was kind of messy. Really, this was one long trend. So we've really had 3 significant uptrends in the last year, with 1, 2, 3 significant downtrends throughout the year. And again, the buy-sell ratio can just help us on our bias. What's the overall trend of the market, and is that trend extreme to one side or the other? We've been in an uptrend. We're now extreme to the upside. Some of the things to do in terms of portfolio management to manage some of that, this area, depending on how long-term your trades are. One idea to go through, and I mentioned this before, when we're looking at a portfolio strategy, which my opinion is that everything should be portfolio based. To just try and pick one stock or 2 stocks or buy something and sell something, I mean, that's okay, as long as you have a plan for how does that fit in your big picture portfolio. If you've got X amount of money as your capital amount, and you're trying to grow that capital, or you're trying to keep that capital safe, or both, then what does that look like in terms of that goal? My goal is to grow my portfolio but I need to do it in a conservative way or a little bit safer way. Maybe I'm not fully invested, or maybe I have a certain percentage of, in stocks or cash or whatever the case may be. In this case, I've still got 42% in cash, and I ended up selling. So one of the strategies I mentioned is when you have a stock that starts to become overweighted because of gains, then you can pare it back just by rebalancing it. And when market conditions are at extremes, then that's an opportunity. You don't have to. It just adds more volatility if you retrace a larger holding that ends up being a larger holding, and maybe it's gone up 150% like this stock here, and it becomes a larger holding, and a 25% retracement can really affect the overall portfolio. So as things are growing higher and it becomes a little bit more out of balance, then we can pare it back. We don't want to sell it entirely. So one of the strategies I mentioned is and I've already done it on this one, but IREN is moving for us today, and it's up my allocation. It's hard to see right there, and I can't mouse over it and have it stay there, but it's 4.3%. I start out every position in this portfolio with 2.5% allocation, which is on $100,000 is around 2,500. So in this case, it's more than doubled, and or it's getting close. I'll show you the chart here. It actually is moving pretty quickly today, and so I probably am not going to make any adjustments, but I did make adjustments on AAOI and CLSK and SRKK. Those are all 100% movers. So I sold off 2.5%, so that now these are still winners, but the allocation in the portfolio is back to 2.5% of the holdings. So essentially it raised, I don't know what it was, about 10,000 in cash. So moving more and more to cash. I also added in a hedge, a potential hedge. SPSX right here, you'll notice it's at 5%. So market conditions are at the top. So one of the other things you can do to supplement your portfolio is to trade around those extremes in the buy-sell ratio. So for example, if I come back here and I'm looking buy-sell ratio, we know that it's wide, right? Just like we knew it was wide here. And yes, we can go in and buy a group of stocks or continue to accumulate stocks the way that we're doing them with the new buy daily strategy of buying a new buy signal. Again, it doesn't have to be the new buy signal. You can have it in your own scan as well. But in this case, if I wanted to try and either add some additional leverage or add some hedges to a downturn, in this case, because we've got an accumulation of stocks, then we don't necessarily want to sell them, but there's a good probability that the market is going to retrace, at least to some degree. We can add some hedges in there. Now, a hedge is simply a way to be able to either offset losses in a stock or a portfolio of stocks with just a short-term instrument. And so the instrument that I'm talking about here is SPSX. Let's see if I can find it in here. And what it is, it's an inverse leveraged ETF. Okay, so I'm going to come off of this perspective, because what it does is it goes up, or I should say it goes down. If the S&P 500 is going up, it's going to go down. It's going to go opposite of what the S&P 500 is doing. So obviously the S&P 500 has had a massive rally. So this has had a massive sell-off. Well, at some point, when the markets look to retrace and we don't necessarily want to sell all of our holdings, we can set up a hedge or a form of a hedge. And that is not a stock, but an instrument like an inverse ETF that does something when the market does something. So in this case, you can see that sell-off that we had yesterday created a big buy signal or a big buy bar right here. And so if we do continue to retrace, then this holding, and I'm just looking for anything to come back this direction. So even if we go back 1 or 2 or 3%, let's say if we go back by 2%, S&P 500 drops by 2%, this is going to increase by 6%. So it's not a huge hedge, and some You know, depending on how you're managing your portfolio, and portfolio managers can do this in a more aggressive way. I'm not going to do it. I mostly just wanted to add it to be able to discuss that as an option, to be able to use an inverse leveraged ETF just for a short amount of time. This is not any kind of a longer term investment. It's just simply a trade to be able to offset any movement lower in the market as a whole. And the allocation that we've at 5%, that's not going to do much for the portfolio. Again, it's just a hedge. We'd do the same thing if the markets continue higher, but we have a very high probability right here that the market is going to at least pull back to some extent, just because the width of the buy-sell ratio is as wide as it typically gets. Okay, so that's just an additional portfolio management strategy in terms of I want to be able to reduce risk into market strength, but I don't want to sell everything, so we can rebalance. So let's look at IREN right here, because it's got, let me just sort this here, and where did we go? So it's up 34% today, massive run up, and it was a really nice bullish pattern where it had this run up, counter trended and corrected right here, and then just really took off today. I need to double check, but I'm pretty sure this is crypto. Let's just take a quick look. Data centers, future proofed, next generation data centers, renewable energy, powered by 100% renewable energy. So that's about, again, we can spend some more time on that and look to see exactly what they do, which sometimes is interesting. I will usually get to this point on some of the holdings when we're watching and seeing what do these guys do. That's just a quick way. I like to go and just quickly, I'll go here, I'll go to this drop down, and I'll just click on Google, and then I go out to their website. Just a quick way to be able to see, because most of these company websites are going to be, what about us, what do we do, what's the process that we're going through. We are a responsible way to power Bitcoin and beyond. So yeah, that's what I thought about these guys. They are a Bitcoin miner, or an energy. They use Bitcoin mining with renewable energy. Because that's a big issue, and where Bitcoin is having a big run right now, and cryptos are kind of reigniting again. This is a stock that has been moving. Most of those have been. In fact, in the muscle stocks group, if you look at these, you've got Coinbase right here. So Coinbase has reached that upper limit, and it's had a big run up. Coinbase is just a broker for cryptocurrencies, at its most basic sense. And then you also have some other ones here, which are, let's see, where did they end up? I saw them earlier. Which scan were they in? I think, was it smooth sailing? Oh, there it is, MARA. So MARA is another crypto miner. And so these guys, the more expensive Bitcoin is, it's almost like a gold mining stock. When the price of gold is higher, miners are making money because that's their product that they're producing, right? They're mining it out of the ground for a certain amount, and they can sell it for whatever the asking price is. So in this case, as Bitcoin has doubled this year, these miners have been doing really well. So kind of missed out on some of these trends, at least in some of the stocks, depending on if you've been following some new buy signals. These have been popping up. These popped up a little bit earlier back here, but now it's in the momentum zone. There still could potentially be huge upside for these stocks, because they got obliterated a year and a half ago. They were up well over $100, and they moved really, really quickly like this last time. So because Bitcoin keeps moving higher, I'd be really aware of some of these stocks. And again, they're gravitating to the top. Oh, here's the other one. It was right below Coin. It's Riot Blockchain. So Riot is another. These guys aren't miners, but they provide mining equipment, and mining equipment for cryptocurrency is just computerized computer hardware, essentially, and processes to be able to run that. So these guys are also moving. Anyway, I backtrack here, but that's a part of the process, to keep a glance of what is happening in the market. You can also glance at that muscle ETFs and look to see, we've got Bitcoin or in this case, it's a Bitcoin ETF moving higher. And so you get a pretty quick idea of what's working. We know that home building is working here, NAIL. So the home building ETF, as it's moving higher, it's all of the home builders. We know that in the sectors here, we've got construction, all of these construction stocks that are doing amazing and just flying like crazy. DFH is one of them as well. Then if you're like, I just want to own the entire thing, then an ETF is a way to be able to do that. And there's lots of different choices that end up popping in here. And it makes for that decision making slightly easier, where you don't have to try and pick the stocks. You can just pick the group or pick the sector. And that can also be done with these sector ETFs. If you go here, sector ETF, these are a little bit broader. You've got financials, basic materials, real estate, energy, healthcare. They're very broad ETFs, but you can do the same thing. You can own the entire sector by owning one ETF. Okay, so currently, so that in terms of portfolio strategy and utilizing the entire process, number one, we're at an extreme to the upside trend. Is there any adjustments we want to make in our overall strategy to be able to reduce risk, yet still hold on to some of our biggest winners? And two of the ways to do that. Number one is to cut your losers. In fact, I sold out of I think 3 or 4 losers just to raise a little bit more cash. They hadn't been performing. They were kind of starting to lag a little bit. And so that's the process, cutting losers and then trimming the winners back and just raising a little bit more cash. And then if you want to take one more step further, you can start to hedge the portfolio with vehicles like inverted ETFs. Those are the easiest for most people because you can trade those in any brokerage account and you don't need margin to do it, versus using a futures contract or even using options where you're dealing with time decay and you're dealing with expiration dates and things like that. Just a combination of stocks and ETFs for the vast majority of traders and the vast majority of our users. TradersPro is it's a complicated process, but it's very easy. It's a very easy process to be able to analyze and look for the right stocks in the current market environment. And then be able, the harder part is to manage some of those trades. Which ones do I buy? How many do I buy? Do I buy daily? Do I buy weekly? Do I buy 5 at once? Do I buy 1 at a time? There's no perfect answer for that. The answer to that is in your trading plan. How do I want to manage my account? Do I want to be a lot more active? If I do, then I've got to be a lot more active. I've got to engage to my process. I've got to be up and analyzing things before the market opens. To make any decisions that day, and making sure that it creates a system that is sustainable, so that you've got a process you can continue to follow and not eventually just end up dropping it and saying, it's just, I don't know, I can't figure it out, or I don't want to mess with this many trades, or I'm not, I don't understand stop losses. Or so if that's the case and you end up feeling overwhelmed in implementation or execution, then one step is to slow it down by making 1 trade a week, or less trades, okay, or even utilizing ETFs, especially just till you kind of get your process and you understand your brokerage account. What are you clicking? What are you doing? What do you, how do you add a stop loss? How do I sell a stock? How do I even buy a stock? If you're still at that level, then even this methodology is probably a little bit advanced. Even though it's super easy, this could be done in a Robinhood account. It's a very easy, and it's an end of day strategy ideally, and that is where we're not in there doing a lot of stuff each day. It's the end of the day, something has happened, we analyze what has happened, we either get a new signal, we get a sell signal, we get a stop loss, or we make some audibles. Those audibles, I call them audibles. If you're not familiar with what that means, and it may be used in other arenas as well, but I just know it from sports, and that is when you have something decided, but then you change it at the last minute. In football, it's called an audible. I'm audibling the play. I'm changing the play at the last minute. And so if you have a plan and you have conditions to make a change, to that plan at certain times, you want to know what those are. Audibles are still a part of a plan, but it's just a changing something at the last minute, still within your plan, but a change. So an audible would be, man, market conditions right here. It doesn't even have to be an audible. It can be a part of your strategy that when these are wide, we know that either markets are going to pause or retrace, and I don't want to have as big of holdings. So what should I get rid of? I want to get rid of my losers first. I want to keep my winners, and I'm going to keep buying into stuff. I'm going to keep adding in every day to the new buy of the day, and let those continue to work. And it's this management flow. It's this management process to be able to ultimately hone in on what your goals are and what your risk tolerance is, and then how to accomplish that. It's going to be a slower process, but you can see even just with this, this strategy in the last few months, I know $100,000 portfolio up almost 18%. That's fantastic, and it's going to continue to grow. And it's because we only started this in September the 1st, and so had we had the entire year and the rally before that, we would have caught a lot of those other big winners as well, at least for tracking, right? For tracking this class and this process is really what this is for, so that you can kind of see it in action and then understand how to be able to potentially implement those ideas. Still focusing here in any market condition, these, the left-hand side, really any of these scans, muscle minis, you're still going to have muscle stocks in there. They're just, or strong stocks, they're just lower price stocks. Anything that's, $1, $2, $3. New buys encompasses everything. Muscle stocks only has the strongest ones, even if they're a buy or if they're buy only. It doesn't show if they have just moved to a new buy. That's what the new buy does. If it's gone from a hold to a buy, it shows up in new buys. If it's just a flat out buy, it still shows up here like Carvana. This was the buyback here. So as it's trending higher, it's still a buy. So you never get a new signal of that buy. So you have to keep an eye on those. If you want to add into something that's already got a buy signal, then have a methodology. Wait for it to pull back inside of the buy zone here, and potentially at a support zone, this 236, especially when you get a stock like this. If you give it a day or 2 or 3 market conditions, if it finds some support and you want to buy into it, that's a good opportunity to buy in right there. Okay, that muscle stocks group. Some of these have just really, here's another one, CIFR. This one I did own and had it and got stopped out and didn't re-enter back here, but I think there's going to be some legs with all of these. CIFR, in fact, let me highlight them here. CIFR, coin, COIN, and ROIT, Riot. And where did MARA go? Is it? I don't know why it showed, unless it's just, it showed up in here. I don't know why it's not in that other one. I'll have to take a look at that. But MARA is another crypto miner. They've had big runs and way overextended and due for a pullback here as well. But that's what a parabolic rally looks like. When it starts to get to here, it's just not going to last much longer. And so it's just absolutely not a smart time to buy. And this can give you that quick eyeball. Are we in the extreme? All right, I'm going to sit tight. I'm going to let it pull back a little bit. Now I at least know what stock I'm looking for and how I want to be able to approach it. Maybe here I go into this trend and I do the same thing. And I say, here's my momentum zone. It's automatic connecting here. The fib snap tool is going to connect. It's just this box. It's automatically going to connect the high and low of the time frame. And so here I'm extreme. I'm in the momentum zone, but I'm extreme. It could go higher and it could get very extreme, but when that happens, it just, these stocks just give it right back. And so we don't want to be in that boat. We want to be patient, let it come back to a more sustainable location that we can participate in. And then next time be watching for these groups, these stocks as we're moving higher. And this is a good example of the way stocks often perform in a bull market in this uptrend right here. We didn't see very many of these stocks back here. There were some of them, but not very many, not hardly any. In fact, we had a drawdown in this overall portfolio as the market was retracing, so did the portfolio. But once it turns green and everybody is piling into stocks, that's when we want to be able to pile in here as well. And that's a very simple strategy as well, as I've mentioned before, is sit these out and jump into those muscle stocks during these uptrends, because those are the ones that are moving like 200-300% in relatively short amount of time. And this is honestly, this is the who's who of all stocks right now. These are you've got Meta, you've got MicroStrategy, you've got ELF Beauty, you've got Upstart, which is another new AI company that's really taking off. Just some good opportunities and some good ideas from this list as well, focused on to be able to look at. So just as a reminder, you can also create your own screen here. These are just defaults. You can go down to the bottom and see what the settings are. If you want to recreate this, you can recreate that by using the same criteria in the screener. I had someone ask a question, can I recreate those screens and then change the date? So for example, if I have the new buy and I have my new buy criteria, I can go back now in that new buy scan and I can change the date. So I could say, what were the new buys on December 5th? And I can change that date, and then I can screen for that date, and it's going to pull in the stocks on that particular date. So if I want to look back at some of these scans and see which ones gave me a signal at some point in time, I can rebuild them inside of the screener, and then I just have to save them as a category. If that's something that's helpful, you know, what was the date here? When I click this, it might change it. It did. Shoot, I think it was the 5th. Which, by the way, if you make a change and you don't save it and you go back to this, it'll refresh to what is saved right here. So if I go back, I think that was the 5th, December 5th, and Apple was in there. So I just want to look to see from that signal. So here was let's see, there was the signal right here in Apple. So it also, you can kind of, you know, sometimes it's kind of interesting to go and say, well, what were the group of stocks on this day, and scan it and then go back and look at a few and see how they performed. Just, you know, just because it's, you know, it's interesting or it's fun or, you know, what if type scenarios as well. But that's one way to be able to do that. I'm going to end on that note. I appreciate everyone's time and effort, and have a fantastic holiday weekend, and we'll see you next week. Bye now.